How's it going, everybody? Welcome to the Colony Court 506C Multifamily Investment Opportunity webinar. Thank you guys so much for taking time out of your night to join us. We have just a few things to talk through in the very beginning, and then we'll take you through the opportunity. So here's the agenda for tonight. I'm going to talk a little bit about us and the team, and then we will talk a little bit about just some of the property. We'll talk about why we're targeting the Kansas City market. We'll also talk about the Colony Court Apartment submarket, where it's located. We'll also talk a little bit about our plan to increase the cash flow and the value, and also how to invest through the new investor portal that we have at Prosperity CRE. But first, just a little bit about us. Zach, you want to go ahead and take everybody through your background?
Sure, happy to. Hi, everyone. So I'm one of the founding partners of our company, Prosperity CRE, along with Mark. I'm a licensed attorney, although devoted full-time to real estate investment through our Prosperity CRE company. I'm also a former real estate broker, former mortgage broker, and have been investing in real estate for around 20 years.
And my name is Mark Adero Rios. I'm also a founding partner of Prosperity CRE and one of the co-lead sponsors of this deal. I am licensed out here in California as a California real estate. I'm also a realtor. I'm licensed NMLS as a loan originator, although I don't practice and do any residential loans. I stay strictly in the commercial space. I have about, I'd say, a little bit over 17 years of real estate investment and sales and lending experience. In my company, TriSource Capital, is a commercial mortgage brokerage and structured capital provider. And over the last few years, I've helped place over $40 million in structured capital and credit facilities. That's for multifamily, student housing, and other commercial products. Right now, we have close to about 285 plus units of multifamily properties under our belts. That's currently being managed. I'd say about 100 beds, maybe 120 of those are student housing beds. And then we also have about 75,000 square feet of industrial flex properties under management as well. We also have some leadership platforms that we work through. We're a charter member of the For Investors by Investors, or what we call Phoebe meetup group. They have about, I think, what is it, Zach, about 9 chapters, 10 chapters?
Yep, they have 9 chapters and I think about 25,000 members.
And 25,000 members.
We're the West Side Los Angeles chapter. We meet
exactly. We have about 1,700 members in that meetup group. And also Zach and I run the passive income in commercial real estate, or we call it PIKER meetup group. And that meets out here in the San Fernando Valley in the Los Angeles area. And we have about 750 members in that one. And then we're also getting ready to do a real estate conference out here at the City Club in LA. And that'll be a one-day event that we're putting on, and we're on the leadership team for that one. Also on the GP side, I want to introduce Raj Tekchandani. And Raj is helping out with us on the investor relations side, as well as doing some marketing consulting for the Colony Court Apartments. Raj also has ownership in about 500 units of multifamily, and also he's been a full-time real estate investor for about just over 6 years. Other people on the team, we're working with Block Multifamily Property Management. They run about just over 5,500 units of multifamily in the Kansas City area and other states. They've been about 27 years of doing business in Kansas City. Our lender is M&T Realty Corporation, and they're direct lenders to Fannie Mae, which we have a Fannie Mae loan in store for Colony Court. And our attorney is Sklar Kirsch. They're handling our SEC documents. We're going to go ahead and just turn off the video here, and that way you can just not look at our pretty faces, but concentrate on some of the information.
There we go.
There we go.
So we're acquiring an 80-unit apartment complex, Colony Court Apartments in Kansas City. It's a Class B apartment complex, and they're all two-bedroom apartments. And current amenities include a swimming pool. They have Google Fiber internet access throughout. All of the units have washer dryer hookups. And spend a few minutes talking about why we really like Kansas City. When we look at a potential investment, we start at the macro level and we do a lot of analysis of the market, the broader market. And so we look at population growth, employment growth. We look at the overall economy and whether it's a diverse economy. And then we also look at what the rent growth has been historically and what the demand is for apartment living. And so when we look at Kansas City, it's a large metropolitan area. They've got over 2.1 million people living there, and they've had a very steady population growth. If you look at the chart on the left, you can see it's steadily been increasing since the mid-1970s. In the last 10 years, it's grown very consistently at about 1% a year. And when we're looking at population growth, the other factor that's very important to us is net migration. How many people are moving into the area versus how many people are moving out? And we want to see a positive net migration. Kansas City has had a nice positive net migration. If you look at the last 5 years, which is the column on the far right highlighted in yellow, you'll see it's had a nice positive net migration for the last 5 years, totaling over 23,000 people. We go to the next slide. When we look at employment, we're also seeing nice, steady employment growth. So along with people moving into the area, the labor force, the number of people who are eligible to work has been steadily increasing as well. In the last 10 years, it's increased from 984,000 up to 1.13 million. And consistent with that, the number of jobs has also been increasing. And so as a result, unemployment has remained very, very low. It's at a 10-year low of just 3.4%. You compare that to the US national average of 7%, unemployment's less than half of the national average. So it's a very good job market. And Kansas City is also centrally located, very accessible to other markets throughout the US, and it's also very accessible internationally. It's got the highest number of freeway lane miles per capita. It's one of only 8 cities in the country with 4 interstates connecting. And there's also a lot of railway transportation that's done through Kansas City. It's number 1 in US freight volume by tonnage, and it's also the 2nd largest rail center in the US. Another factor that we look at when we're looking at markets is whether or not they have an international airport. That's a good indication to us of the potential for the market to continue to grow. Kansas City has an international airport, and the airport is expanding. They're in the process of a $1 billion airport expansion. They're adding 39 new terminals there. It's also a very diverse economy. They've got a number of both blue-collar and white-collar jobs and employers. And just a few of their top employment sectors include healthcare IT, biotech and medical research, animal health, international transportation logistics, insurance, automotive, industrial, and distribution. And just to highlight a couple of these, healthcare IT, Cerner is the city's top employer, and they're a healthcare IT company. And Ford Motor Company, they have the largest vehicle assembly plant in the US, and both of those are very close to the Colony Court Apartments. So another factor that we like to look at is specifically with respect to apartments, what's the history in the city for rent growth and for demand? And with respect to rent growth, if you look at the chart on the left, you can see it's had a nice steady rent growth over the last 10 years. The green line is rent growth for 2-bedroom apartments. Colony Court are all 2-bedroom apartments. So you can see on average throughout Kansas City, the average is just over $1,000 right now, and it's been steadily increasing. The chart on the left shows rent growth as contrasted with vacancy rate. Vacancy is the orange line, and vacancy is trending right near its all-time low, which is an indication to us that there continues to be a very high demand for people who want to live in apartments. And as we zoom into the submarket, it's also located in a strong submarket. So when we're looking at submarkets, a few of the factors that we consider include taking a look at the school district, how good the schools are in the area, looking at the crime rate, looking at what are the characteristics of the neighborhood. Is it in a residential neighborhood, for example? What are the nearby shopping areas, restaurants, entertainment? We also take a look at how nearby some of the likely or potential employers are for the residents who might live at Colony Court, as well as how accessible it is for transportation. And so Colony Court is in a very, very good school district. It's in a been awarded Blue Ribbon the last 2 years. If you look at the two charts on the right, it rates a 10 out of 10 when comparing the school district to other districts in Missouri, and a 9 out of 10 when comparing it to other school districts throughout the U.S. And to get a flavor of some of the nearby schools, Maplewood Elementary School rates a 9 out of 10, the nearby high school rates an 8 out of 10, and then another elementary school rates an 8 out of 10. So the schools are very good schools in the area. And crime is also low. The crime rate in the neighborhood's relatively low. If you ask, this is a recent survey that was done of residents in the area. 100% of the residents feel that it's safe to some degree, and 43% feel it's very safe. And 86% of the residents believe the police are either very responsive or they're there when you need them. So crime rate also does fairly well in this neighborhood. And when we look at getting a flavor for what the neighborhood is like, it is in a very nice residential neighborhood. Right across the street are duplexes called Creekwood duplexes. And these are 3-bedroom duplexes. They're renting for about $1,175. And then about 0.8 miles away is a large townhome development called Bennington Townhomes. And these are primarily 2-bedroom townhomes that rent for about $1,250 a month. And as we mentioned, Cerner, the city's largest employer, their corporate headquarters is about 2.3 miles from Colony Court Apartments. You can see there in the bottom left of your screen is the Cerner headquarters. Ford Motor Companies is in the top right area of the screen, and that's the largest assembly plant in the U.S. They build the Ford F-150 there, as well as a couple of other cars. And then, thanks. There's a very large hospital called North Kansas City Hospital, and they employ about 3,500 employees. We also have Harrah's Hotel and Casino at the bottom left that employs about 300 employees. And then there's also a large amusement park called World of Fun and Oceans of Fun to the right of the apartment. And so there's also a lot of shopping centers and a lot of your typical restaurants that you might recognize, including Target, CVS, Walmart, Chipotle, Starbucks. And we've covered some of these other employers in the bottom that are amusement related. And there's also a very nice park within walking distance to the apartment complex. And as we mentioned earlier, Kansas City's very accessible. We've got a lot of highways, and several of them are within several miles of the apartment.
All right, so let's talk a little bit about a plan to increase the cash flow and some of the value on the property. So we'll just talk a little bit about how we plan to upgrade the units in some of the common areas, how we'll look to bring some of the rents up to the market rate, improve the management Also, we're going to layer in some additional revenue streams, and then we'll talk a little bit about distributions with ongoing cash flow and the sale. So here are pictures of, these are unrenovated units, and just some of our plan to renovate the unit. So we plan to spend about up to about $4,500 per unit. We're looking for an estimated rent premium of about $100 to $120 per unit. That will take us up from that average 775 rents up to we're going to target about a $900 a month average rent throughout the property. We plan to upgrade all 80 of the units, and it's probably going to take us, I'd say, about 30 months. What we'll do is we'll do faux wood vinyl flooring in all of the wet areas, and we'll upgrade the carpet in the living areas, and we'll do a two-tone paint scheme. The vinyl flooring also will be in the entryway. We'll do new fixtures, so that'll be your ceiling fans, that'll be all of your sink and faucet fixtures and hardware. We'll also do hardware on the cabinet doors. For the countertops, we will spray finish those, and also we'll paint and upgrade the cabinets as well. And for the common areas, a few things that we have planned. So we have a lot of space on the property, a lot of green space. So we plan to do at least one, maybe two bark parks on the property. We're going to add some barbecue areas and picnic benches. There's some space in between each of the buildings that we can add those, and also upgrade some of the landscaping, making sure that we take advantage of all of the green space. In year 2, we plan to, and you can see in the picture here where the red arrow is, we plan to recapture one of the units that's being used as the office, so we can bring that back online and make that revenue generating. Our plan is to build onto the existing pool house, which you can see where the red arrow is, and you can see also there's a little sidewalk there. What we'll do is we'll pad out that and create a little foundation and add on to that building and create a leasing office there. We'll also do some swimming pool enhancements. We'll probably do some new swimming pool furniture, as well as fencing around the pool and landscaping too. All right, so currently the asking rents are right around $800 to $830 a month. If we look at the last 10 leases on the rent roll, and currently I think we have about 3 people that are due to move in by tomorrow. And so that will bring our current occupancy up to about 97%. That leaves 2 admin units, one for the office and one for the what they're using as the maintenance storage. And so the last 10 leases on the 940 square foot units, those are the slightly smaller units, they're averaging right around $775 per month. That's unrenovated. Those are just straight turns, clean up and, and paint and turning them around. And then on the 1,000 square foots, the slightly bigger ones with a slightly different floor plan, they're getting about, on the last 10, average about $814 per month unrenovated. We do have one unit at the complex that they did a full renovation at $4,500. That's on one of the 1,000 square feet. They rented that in about 2 weeks once it came online. The finishes are exactly the level that we're going to be targeting. That would be, all the vinyl, the faux vinyl flooring. That would be the upgraded carpeting, the refinished cabinets and counters, etc., new appliances. And they got $900 for that unit. For us, we like to see more units that are renovated in order for it to be a proven plan. So that's what we'll be targeting. And right when we come in, that's what we'll be looking is to prove out our plan at that higher rent do a few units, renovate on some of the turns, and go for that higher rent in order to prove it out. We believe that it will take between 18 and 30 months in order to renovate all the units in the property. And that is based on the lease terms and based on a conservative view on making sure that we don't push up against a possible downturn or slowdown. We may be able to complete all of the renovations, somewhere around 18 to 20 months, but conservatively, we're planning on doing it before month 30. Over that time, we plan to increase the rents about 15.75%, targeting $100 to $120 a month premium, and average rents right around $900 per month. Additional revenue streams that we'll have, we plan to install washer dryer units in each of the units. Currently, there are washer dryer hookups. Some of the tenants currently, they either have their own washer and dryers, they either rent their washer and dryers, or they don't use washer dryers at all. We do have the hookups there, so we plan to phase in, purchase washer dryer units, phase them in, and then rent them at a premium to the tenants on new leases. We think that we can phase it in over 2 years. The cost is, I'd say, about $1,000 for both washer and dryer, and with the premium, we think it'll take us about 2.5 years to get paid back on those. We also plan to institute a trash valet service. We'll use one of our porters to come by 2 times a week, pick up the trash for those units that want it. And we're going to try to phase it in over the 2 years, the same as with the washer and dryer units, and plan to charge a premium of about $15 per month for that service. What we noticed when we did our due diligence on this property, and one of the places where we plan to increase revenues is to streamline some of the management. The current management company that's been on the property, they've been there over 10 years. The seller hasn't visited lately, if at all, in the last few years. So he's kind of left a lot of the deferred maintenance items to current management. Although they have shown an improving picture while we've been in escrow, there is a lot of deferred maintenance and things like that the seller left for the management company to do, and so we felt like it was time for a change, and so we're not going to keep the current management on. We plan to engage. Actually, we're already engaged with Block Multifamily Group. They're a very large property management company in Kansas City, Missouri. They currently have over 5,500 units of multifamily. That's in various states, but they are concentrated in the Kansas City MSA. That would be Kansas and Missouri, both sides of the river. We're using them for property management. We're also going to use them for third-party construction management as well. So talking a little bit about the investment and return structure, we're currently looking for $3.4 million in total equity. We are just about to get approved on our Fannie Mae loan. That's agency debt at 75% LTV. That's a 10-year fixed loan with 3 years of interest only. Right now, the U.S. Treasury has been fluctuating just a little bit, but I believe we're probably going to get our interest rate right in the 4.5 to maybe 4.6% range. For this investment, we have a $50,000 minimum, and investors can expect to receive 100% of the cash flow to be distributed to them every quarter during operations. And we're doing a 75-25 profit split on the sale. Right now, we're planning to send out our first distribution after the first full quarter of the investment. And looking at the ongoing cash flow and profits on the sale. So with the agency loan, we plan to return do a partial return of capital to investors. That's going to be at the end of year 3. We'll be taking advantage of an agency supplemental loan. If you don't know what a supplemental loan, we'll just call it an in-house second loan from Fannie Mae. And so in year 3, we'll be looking to return about 33% of investors' original capital, and then the remainder of the 66% will be returned when we sell the property. So our targeted average cash on cash return for 5 years is just above 7%. And on a 10-year hold, we're looking at just close to about 8.25. That's average cash on cash over those periods. And the total profits, that would be including the sale, for 5 years, we're estimating about 111%. And for a 10-year hold, that's about 206%. So the targeted average annual return would be for a 5-year hold, right around 22%. And for a 10-year hold, it'd be about 20.6%. So if you're looking at a 5-year hold, if you put in $100,000, you can see in year 1's the estimated return. These are rounded up a little bit just to make it a little bit simpler. You can see roughly you get about $7,000 per year for years 1 and 2, and then that goes up a little bit to about $8,150. That year 3 is when you'll see that partial return of capital when we do the supplemental loan. Year 4 is right around $6,150, and then year 5 about $7,300 plus the return of capital, and then the profits on the sale. So the total targeted returns are right around, let's say, $211,000 rounded up. All right, so what I'd like to do right now is I would like to just talk a little bit about the investment portal. I'm probably going to come out of the slideshow here and move into the web browser. So our investor portal is on our website. It's at invest.prosperitycre.com. And if you look over here on the right, you can see some of the critical days where you have funds and paperwork are due on May 6th. 2019, and the closing date is estimated for May 15th, 2019. So let me just come out of here. And Zach, can you see the,
Yes, I can see it, Mark.
Excellent. All right. So this is the portal here. And again, if you type in invest.prosperitycre.com, it'll take you to this page. If you don't have an account already, this is the login page. You just go ahead and hit the register now button, and then we'll take you to the sign up page, which is pretty simple. Just enter your name, your email, phone number, put in your residency, a couple of small questions that will fill into your dashboard, and whether or not you're an accredited investor, and of course, how did you hear about this? Once you you click on, you agree to the terms of service and the privacy policy, go ahead and hit register. Since I already have an account, I'm going to go ahead and log in right here. And this is what your dashboard looks like. Okay. And these are the active opportunities. Since we only have Colony Court right now, this is what this looks like. If you go into your dashboard section here, you can see some of those answers that you answered in your registration are already filled in. If you need to edit those, you just hit edit and you can change all of that information or add additional info. Also up here, you can add a profile for a LLC, as well as if you have a trust, or if you're investing in an IRA, you can add profiles for all of those. Because they have separate EINs or tax ID numbers, usually you want to, if you're going to invest through an LLC or a trust or an IRA, you want to create a separate profile and go through the investment process using those EINs. Also, we have a document section here. This is where we'll upload your signed PPM documents and any other documents that are important. And this is also where you can upload your accredited verification letter from your CPA, your attorney, or your financial advisor. Or if you use the company that we partner with, Early IQ, they will send a certificate out and we'll upload this here prior to approving your investment. So going into the hitting the the read more button. This is what the back office looks like. Shows a summary of the property. We have some video up here. This is a small This is a small commercial. This video will be replaced with the webinar that you have today, that we're going through today. And just kind of talks through a very kind of high level overview of the investment, and then also takes you through the steps to invest. We've also created a video that's a little bit longer than us talking here that you can watch. Takes you through the investment property, the PPM signing, and all that stuff. This is a 506C, Reg D 506C investment. That means that all investors have to be Verify accredited. We have two very simple ways of getting accredited, verified. And one is using a letter template from your licensed CPA, attorney, or financial planner, or you can easily go to and use our partner at no cost to you, Early IQ, and they will do the third-party verification process for you. Very simply, you just click on the link there and then go ahead to get started, add your email to this form, and they will reach out to you and get started to get your verification done. We've seen people get verified on this deal as quickly as it looked like, I think, 6 hours, or up to about 48 hours, depending on what types of documents that you submit. You can submit on your W-2 income, and you can also submit on net worth. Again, to be accredited, Verify accredited, you have to have either 200,000 per year in income for the previous 2 years, with the expectation that you're going to make that next year, or 300,000 with your spouse, and over $1 million in net worth, and that it's excluding your personal residence. I just want to make a note that Early IQ does, in order to see all of the liabilities on your balance sheet, Early IQ does pull a soft pull on your credit report. It's not a hard pull, so that doesn't affect your credit score, but they do a soft pull, and they will see all of your liabilities. And that way, when you submit your assets, they can create a mini balance sheet for you and verify your credit status. And when you're ready to go, after you've checked out all the documents here, your PPM documents and other items of the property packages here, your letter template and everything, then you go ahead and click the Invest Now button, and it will take you through the steps for the investment all the way through. And let's just say right there, and you click the documents, and it'll take you to the DocuSign process, just like that. I'm going to close this out for right now. And good. So
if anybody's going to the investor portal, if they're having any difficulty, please feel free to reach out to either Mark or myself, and we'll be happy to assist you in the process.
So what I'm going to do right now is I'm going to stop the recording. I'm going to stop the recording, and then we can just answer some questions. 1 second here. There we go.